Hi, everyone. Good morning once again. Thank you for attending our session, or maybe just chilling out here. Getting a break. It's okay. Hope that, it's going to be a good experience, and I'm sure for the ones who are interested in this topic, I invite you just to take a learning stance. I think we all have different experiences and different different visions on the thing. So I was just maybe, because as you see, there's only two of us. There was supposed to be more people than that. But unfortunately, out of, force majeure reasons, that's the situation. So maybe we'll just have kind of a fireside chat or something like that. So maybe I can moderate a bit, Ellie will moderate a bit, and I invite also you guys to take to join actively the conversation, because there is just not too many people. We can just take, a good use of this time. So do you want to say something about you, Ellie?
Yeah, so welcome everybody. It looks like unlocking diversity has been locked. I mean, yeah, we had a couple panelists drop out for various reasons, but I'm glad everybody's here. Until the room fills up a little bit more, what I'd like to do is maybe do some quick intros from each of you. We might as well just keep it casual and keep it informal. We'd like to know kind of who you are, where you're from, your organization, and maybe like a burning question or issue. The last person that walked in goes first.
Kia ora team, Dan Khan from New Zealand. I've been building the startup community there for a very long time, so fingers in lots and lots of pies. I have always been interested in supporting founders, but more and more coming around to thinking capital is the way to do it first, because all the program stuff, there's no business model without the funds, right? So,
thanks for connecting with me on LinkedIn.
Yeah, good morning. My name is Becky. I'm originally from El Salvador, but I've been living in Australia for the past 13 years. I work at the University of Adelaide as an academic tutor. And yeah, I love obviously entrepreneurship, innovation, and I'm very interested in learning more about investing in education.
Good morning. I'm a policy advisor for New Zealand government. Work in investment policy team. We work on a few different things, but we definitely have an interest in investors and emerging investors in particularly underserved sectors and groups, especially for a New Zealand context.
Hi, I'm Stephanie Alvarado. I live in Miami, and I'm here from NIFTY, the Network for Teaching Entrepreneurship. We work with primarily high school students from under-resourced backgrounds, teaching them entrepreneurship, and then upon completion of the program, if they go on and want to launch their businesses, finding them the investment to do so.
Hi everyone, I'm Hannah. I'm from the Canberra Innovation Network. So we are a not-for-profit and collaborate with the universities, local government and other organisations to support startups and researchers. And part of my role is helping to support entrepreneurs to find funding. And so looking for ways to break down barriers to get more diverse investors and mentors into our network.
Hello, I'm Raphael. I'm from the Federal Department of Industry. So we look after commercialization and entrepreneurship policy for the federal government here in Australia. So we have a lot of programs that look at diversity in founders, and I think we're now looking more at ways of diversity in investors and in venture capital. So I think this would be an interesting session to learn more about that.
I'm Michael. I'm from Significant Capital Ventures, so a venture capital fund in early stage. And because we're early stage, we work very closely with the ecosystem, including Hannah, because we are a Canberra-based VC. So always curious about how we can get more capital into the early stages, particularly the angel stage, because it's really crucial to then hand over to us at the appropriate time. Also an angel investor, so the way that we can get more people into angel investing, the better.
James from Murdoch Children's Research Institute here in Australia. Very interested in just understanding more about emerging investors, intersection with philanthropy in particular. We do a lot in entrepreneurship.
Hi everyone, I'm Abs Bulbulia from Breakthrough Victoria. So we're the global, we're the Victorian fund, a $2 billion fund investing in impact. I work in the founder startup success piece, so supporting founders on that growth journey. Really interested in the overlooked, underrepresented communities, not just in the founders, but also how do we do this in the investor space as well.
My name's Elizabeth Lang. I'm the founding CEO of Diversity Focus, which is a training, consulting, and research company. We do work with predominantly medium-sized companies, and we also do a lot of work with local governments and various government departments that want to enhance workplace culture, equity, and inclusion. So I'm not an investor, but I am a founder. So thanks.
Hi, my name's Lisa Matsu. I work for Federation University based in Gippsland on the Gunai-Kono land. I'm industry engagement and innovation manager at a innovation hub based in Morwell. I've only been in the role for about 6 months. We're just essentially a very young ecosystem, so just generally, and one of the things we'd like to do is encourage diversity, so yeah.
Very nice. So just quick observations, and we'll do some quick intros, right, Anna? So I noticed a lot of programs and policy, and then just a couple of venture folks. So I find that really, really interesting. I was expecting a lot more angel and venture folks to be in the room. So this is sort of like getting my wheels rolling. Anna, you want to start with?
Yeah, I actually find it really fit. So welcome, guys. I think it's really great. I think we can discuss it later, but I think it's where policies, where a lot of stuff starts. So a bit about me. I've been in the pan-European and global ecosystem for more than 10 years now in various roles. Right now, I'm on the board of the largest deep tech fund in Europe, which is 10 billion euros, which was launched by the European Commission, and is focusing on European founders. I also run a company which is called Connectology. So we invest in startups. We have an investment club. We do investment and entrepreneurship education. We do behavioral science research on topics of investment decision making, because I really believe bias is in the core of this topic. And a couple of other things like innovation advisory on co-investment funds, tax breaks, and stuff like that for emerging markets. I'm also an Obama leader, advisory board for South by Southwest, several other things, but I'll stop here and give it the floor to Eli.
Cool. So let me kind of frame up my background with a little bit of some topical areas and findings and learnings, and then I'd like to learn from you what you're seeing, and let's say from the policy side, the program side, and the investment side. So let's start with some of the programming components of it. So incubators, accelerators, tech transfer, I-Core, all of that work is continuing forward. What we have seen in the U.S., and this is going to be from the U.S. context, I may add some flavors in some other countries, but primarily U.S. So the federal government, National Science Foundation, National Institutes of Health, Economic Development Administration, Small Business Administration have deployed literally millions and actually billions and almost trillions of dollars into this space. So there's a few areas that they're trying to improve on. One, these accelerator programs to support early stage innovators, early stage entrepreneurs. There's a lot of grant funding. If you look at the Small Business Administration, what they're doing, the Economic Development Administration. The Economic Development Administration went from like a $3 billion budget to a $30 billion budget almost overnight. And so what that's done is the director there, he's overwhelmed trying to figure out how to deploy that capital into communities that are underrepresented, because traditionally they have not had an opportunity to compete. And now they're asking them to compete, and they don't have those partnerships. So they're having to figure out how to deploy that capital into these underrepresented communities. So there's more outward-looking support to, well, we got to train them because we didn't fund them for the last 30 years. You know, so now we got to go train that small rural women's support network, that nonprofit in like nowhere, Iowa, and how do they compete on the like a $1 million grant? So there's programs that are happening on that front. There's also a new program that was issued by the Treasury Department. It's called the Small Business Credit Initiative. It's a $10 billion program that deploys funding to states for them to help set up new venture funds in their state, for those funds to deploy into underrepresented founders or underrepresented companies. The problem is that the funds that are applying don't have the what? Don't have the what? Track record. So they are not garnering the investment that was designed for them. So who do they go to? The venture funds that they funded 10 years ago. And what do they look like, right? So I'm helping the state of Delaware stand up their venture fund, and they received $56 million. No state will receive any less than $56 million. California will get over $800 million to deploy into venture capital. Where do you think those dollars are going to go in California? Where are they going to go in California? What's in California? Silicon Valley. Those monies are going to go. And what does Silicon Valley look like? Right? So we're being challenged right now to figure out how do you actually get those dollars into the right levels. And then so this EDA, SP, and then the last piece is NIH, National Institutes of Health, National Science Foundation. They're actually, I would say, doing this the best. They're actively going out to the universities and trying to find those underrepresented innovators and saying, look, we want to fund you. They'll give them $50,000 grants to go through like lean startup programming, just start to get the mix. We're going to run a boot camp next week in Las Vegas with all underrepresented scientists on that front. So that's on the programming side, and I touched a little bit on the funding side as well. On the policy side, I'll talk about it from the investor component. There's a big tug of war that's happening in the U.S. Around angel and venture and how you open up new pathways for new accredited investors. So I had an opportunity to testify before Congress in February, and it's talking about the accredited investor definition. Who here knows what an accredited investor is in the U.S.? Okay. In order for somebody to be an angel investor or a venture investor, you have to meet any one of these thresholds. You have to have an income of $200,000 or $300,000 if you're married, or $1 million net worth, not including your home, or you have some sort of like professional certification, like a financial certification. And so what the SEC, the Securities and Exchange Commission, is saying, you know what, those figures were determined back in 1982. We need to adjust them for inflation. So rather than doing 200 and 300, it should be 500,000 and 600,000 and $10 million of net worth. Well, guess who gets to qualify for that again, right? So I testified that if you did that, you would eliminate over 75% of the angel networks in the country, thereby eliminating everything in the Midwest, leaving only California, San Francisco, New York, and Boston. Okay, so there's a whole move around. There's a big tug of war. We proposed a bill that would enable more access to capital, more access to accreditation through professional certifications. Maybe you work at an incubator, an accelerator, or you've worked at a venture fund, but you don't meet those income thresholds, but you know how to evaluate deals, and you're already investing in the stock market or whatnot, so you can still come into the game and play. And so it passed the House. It's now going to go to the Senate, so we'll see what happens, but there's a big tug of war there. The other one is around what's called a small qualifying venture fund. And what they want to do is expand the scope, because currently, if you raise a fund, a traditional venture fund, you're limited to 99 LPs, limited partners. But if you're an underrepresented fund manager, you need to expand the network of investors. So they created the small qualifying venture fund that allows you to go up to 250 LPs. So now you kind of expand that network, and but you're limited to only raise $10 million. The idea is to raise that. I always get the numbers mixed up. It's either go up to 50 or 100 million, and then you can raise from 600 LPs. The challenge with that, though, is that you're still going to be a solo GP, a solo fund manager, managing 600 investors. So there's a little bit of it's just a weird sort of combination of what's trying to happen. So you see the government from the SSBCI, the accredited investor definition, the venture, small qualifying event. They're trying to figure this out, but they're doing it in a way that is inadvertently going to impose more pressure and more burden on those underrepresented founders or funders or fund managers. And that is something that I personally experienced. There was an opportunity to have me become a 51% minority owner in a venture fund. But when we looked at it from a programmatic and policy perspective, I said, I will get crushed and I would have to bear that risk. So I then have to subvert and go back to the traditional way of forming the fund so that I can utilize those networks to get me in the door, right? So I have to figure out how to balance that out, and I'm curious to hear what's happening on your side. So that's sort of what's happening from a policy perspective, a programmatic perspective, and a funding perspective. I'd like to hear from the policy folks on some of the policy initiatives that maybe you are thinking about for your respective countries.
Maybe I can just jump in if you don't mind, because there is a couple of things that I would like to follow upon because from the European perspective. So as I mentioned, I'm on this board of the European Innovation Council, which was set up essentially to fix the market gap that we are facing in Europe when it comes to research and especially innovation, with 10 billion euros. So we have 27 countries in the European Union, and I have the pleasure to chair the working group that's related to the so-called widening countries that actually make more than half of these 27. So this is 15 countries that are underrepresented in the allocation of this funding. Even more shockingly, they only get 6% per year. Whereas, for instance, France or Germany per call get like 20%. So we have done actually, I've been fighting for this for 2 years in the European Commission, which is again designed on the principles of what you are describing in the US and in terms of the decision making. So essentially the problem is when I work with diversity, there's two aspects that I'm focusing on. One is women, so female founders, female investors, and the second one is geography. So we are here talking about geography and these 15 countries, which are like Croatia, Bulgaria, Romania, Latvia, even Estonia, which is 1 million people, every second person is like a billionaire founder. But anyways, the problem here is the bias that I was talking about earlier. So the whole process goes, there is several selection steps until you get to the investment panel. And then obviously, in many cases, people watch, Shark Tank a lot and things like that. So they expect the Silicon Valley entrepreneur to come and pitch in perfect English and whatever. And you'll, get a feeling of countries like they're from the Eastern Bloc, right? So they don't speak the perfect English. They're not appropriately dressed. Maybe they're like some totally, crazy scientists from a lab, super passionate about something, and then they're not going to get it. They're not going to get it. Whereas, a geography that's like France or Germany or whichever may have a better chance. So I have pushed for a randomized control trial. So latest, behavioral science method to do a blind evaluation with all our, or most of our investment committee representatives. So imagine this. So everyone gets a questionnaire here, and we randomly change the variable of the country where the entrepreneurs come from and the gender. So we'll at the same time get the same text about the great business case, which has IP, clients, LOIs, everything, and you're gonna get France, I'm gonna get Croatia, you're gonna get Germany, and statistically significant in the end, which probably doesn't surprise you, certain countries get evaluated lower just because we have changed the variable of the country. I mean, this is just one of the aspects that we are dealing with. So this was like a really huge thing, and in the end there is this report. There's just a very small reference to it because, of course, it puts in question all kind of public money distribution in Europe in that sector. But I think it's very important to challenge these kind of things. I think it's very important, to say, okay, yes, everyone, before it was like, yeah, everyone knows that there is bias, but people need to, figure it out. Excellence is our main criteria. Sure, excellence is our main criteria. This is not charity. It's a super competitive funding instrument in Europe. But there are no conditions for this excellence if you have two founders totally treated differently. So I'll leave you with that. And the second thing, we're talking about like funding and a lot of money. I think there is not a lack of money in the market. There is a bunch of money in the market. I think there is this investment readiness paradox where investors say there is no good projects to invest in, and I'm an angel investor, so I see a lot of different things, like someone comes to you just with a PowerPoint presentation, they're like, oh, I want an IPO in 3 years and my company will be ran by an AI CEO and stuff like that. Whereas on the other hand, you have like entrepreneurs, they say there are no investors, there are no good investors. So I think we need to work with policy to have certain, and we are actually running at my company right now, like a gender bias experiment to try to understand what are the best policies. I mean, people argue a lot about quotas and things like that. I think quotas are a necessary evil, when it comes to many things. Because even at this conference, you'll see sessions which are not diverse, and we are here, preaching and whatever. So I really think policy is a very important ally in this situation where, we just need to impose some things. For instance, in Europe, we have now that you need to have a certain number, a percentage of women on every board of the company. Things like that. People that look alike, they will never think about, hey, what do you have to say? Or they just don't, like, they don't see you. They don't hang out with people like you, right? So policy is one thing that I really think there needs to be like a really serious action plan targeting, each fund or on a national level, on a regional level, to have at least a quota for a certain group, to have funding secured for this underrepresented founders or even investors like co-investment funds, because first of all, you have a lot of underrepresented people that have a lot of money, they just don't know how to invest, for instance. And then you have a lot of let's boost your confidence workshop for women investors, for instance. This is not like skill building, this is like time wasting, So I think there's just a lot of problems that are in the ecosystem. So I just wanted to follow up on that from the European perspective.
And let me touch on two more things on a policy side. So California imposed this notion that if you're going to be on a board, that you must have a certain amount of women or whatnot. So that's sort of in the mix, hasn't really picked up across the country. A friend of mine created the diversity rider for venture capital. So if you're going to invest in a company, you must have X amount of diversity built into it. So look up the diversity rider. And then there was a study, and we talked about this kind of blind analysis or blind study evaluation for pitch tests, for pitch competitions and demo days. And that got shut down because you're basically telling people that they're either racist or sexist, right? And it's like, do you really want to do that at your demo day? So these are very, these are common issues that you have to face. And then the last thing is the notion of promotion versus prevention questions. There was a study done on the questions that VCs ask, founders. And I'm gonna pick on Dan. Dan would get a question like, Dan, tell me how amazing your company's going to be and how many billions you're gonna make us. And then I'm gonna ask Anna, tell me how you're gonna keep your business from failing, right? So promotion versus prevention. And there's a whole study around that. So let me turn this now over to you, because let's hear from some policy folks on what you're working on in your respective regions and where you want to get to.
Yeah, so in New Zealand, if you look at angel investors, there's a angel association for the whole country. There's a whole bunch of networks, but they're all part of this organisation. We are plugged into it, but really it's a private organisation. They're working on stuff like diversity. I won't talk too much about that. On the venture capital side, it's reasonably small in New Zealand, so there's a limited number of venture capital funds. And we have a government-backed VC fund. Their main fund, well, they've got two funds, but the main one is a fund of funds, so they invest into these VC funds. So to date, like, I think most of our work has been on diversity for founders. So I know, I think Breakthrough Victoria or someone talked about shifting from that sort of stuff to investors, and it's kind of coming on our radar a bit more as well. So we're still working on the founder stuff, and our main pathway to do that is through the government-backed fund. So we have like policy oversight of them. Obviously they have their own independence in terms of investments, but we can steer them in certain directions. And yeah, some of that stuff is like invest a bit more in Māori, Pacifica, women and regions, and step it back a bit from SaaS companies, which have no trouble raising money. In terms of, you know, diversity among investors, I think like women for New Zealand is the most obvious one, and it's had a bit more visibility, especially this year. So calling out the female GPs in New Zealand. So there's been a few articles, and you know you can put them all in a single article. So like that's how small New Zealand is. And I just saw this week that like a female has been promoted to GP in one of the New Zealand funds. So that's great. And that sort of stuff is kind of happening by itself, and not too much government intervention required. But we also had a council that was formed for about 12 months and just produced a report to the government earlier this year. And one of the recommendations was a Māori venture capital fund. So they're like equivalent for First Nations. They have a much higher proportion of the population in New Zealand. And so, yeah, dedicated fund for, and the question is, like, is it, are they the investors, or is it into startups that are Māori-led? So that's, you know, a question to be answered. But going back to the government VC fund, they also have allowance for first-time investors. So they capped it at 20%. I think it's their total fund, 20% into first-time investors, and they've already maxed it out. So when we say government VC fund can invest into this new fund, like they say, oh, we can't because we're maxed out. And this goes to the point you made about track record as well. So first-time investor, no track record. And then there's issues that we'll probably come up with against regarding it really does need to succeed if it's set up to help attract follow-on investment from other groups. Because if it doesn't do well to start with, then it's really hard to bring those people in. So that's the sort of space that we can look at and play in.
Excellent. Just another statistic in the U.S., 1,500 plus new funds were started under $50 million or less since 2018. Most of them were started by emerging diverse managers, and we've lost over 50% of them. We'll lose another 50% because they don't have track record. And the corporate commitments that were made of about $75 billion toward those funds, only $400 million has actually walked out the door. So there's a big mismatch in the intent and the policy and what actually got into their hands. Anyone else on the policy side that you'd like to share some of the initiatives that you're pushing forward that are working or not working, or you would like to have pushed forward?
Maybe I can just follow up on what you said. I think it's definitely, you know, if the fund is maxed out, then, you know, you need to fix that. Another problem is, you know, you were talking about these research and things like that. Actually, there was a research that just came out that if a founder, especially a woman, raises their first capital from a female-led fund, it's going to have a hard time fundraising again because she will be perceived as incompetent. So I think, like, for instance, for me, bias is really the key issue here. And then we need to have the policy around it, and we need to have the funding, put the money where the mouth is, and not just have, like, these exceptions, congrats about the GP in New Zealand. It's really great, but this shouldn't be like a big deal in my view. I'll just leave you with another story because I'm really passionate about this behavioral science research. So in the 50s in the US, there was this orchestra audition. And they really wanted to increase the percentage of women in the orchestra. So they had auditions, and after these auditions, they didn't increase the number of women. And then someone figured out, okay, maybe it's about the heels that women wear to the audition. So they put a curtain, and everyone came in barefoot or in socks or whatever. And then they actually got after this is unbelievable, But when you think, I'm talking about women because I'm focusing on women and geography, as I mentioned. But, when you think about it, like, women have been present in the labor market, for 100 years or so? So it's like an absolute perspective that we need to take in consideration. There will be, it will take generation changes if we continue this way. But I really think, especially for the women here, we should never take it for granted, or for any other kind of underrepresented group. We can never take this for granted, because there is so much changes in the society and the policies and politics and everywhere in the economy, where we always need to be alert and fight for these policies that will enable us to have the equality of chance. If you're not good, that's your problem, but you have to have the opportunity to be there and try to succeed.
So let's hear from the program folks. Who's running some interesting programs? I mentioned some that are happening in the U.S. that are trying to stimulate, more investment. And there's another kind of new capital structure that has really taken a lot of popularity amongst angel investors, revenue-based financing. And so there's new funds that are being started. A colleague of mine, he's on his third fund, because angels just love it, because they're investing in revenue-generating companies, and you're basically guaranteed that dividend every quarter. And the way it works is you find companies out in the community that are generating revenue, dry cleaners, car washes, dog groomers, your non-venture backable type, non-exitable companies, and you work with the founder and you say, where do you need to get to? And you work out some arrangement and you say, we'll invest in you, or we'll provide funding at a number of, let's say, $500,000, and let's get to 1.5x return over a period of time. We will adjust the monthly payment based on the revenue that you make that month. So it's not like a loan payment. It's adjustable so that entrepreneur doesn't feel that pinch. But then every quarter, that return goes back to the investor. So it's a nice slow drip, and it helps the owner, and you don't have to get into the issue of valuation or ownership stakes or anything like that. They don't have to change their capital structure or their corporate structure, and it helps them move forward. That has become extremely popular in the U.S. amongst angel investors. So revenue-based financing is also another mechanism to get hands into. And I just realized that it requires a lot of lift on the funder, because you have to be really on top of the books for that company. But if you're able to figure it out, that's so there's some companies out there, Sage Growth Capital. I'm on the board of Founders First Capital. They do that kind of work in the space. So any programs that are supporting founders that you're working with, either at the young level, the K-12 level, college level, or higher, that I'd love to hear from you. Don't be shy, guys. Yeah, go ahead. You want the mic?
I can talk about everyone's. Thank you. Cool. So I guess one of the challenges, and I'd love to get people's thoughts on, is this, like, things are changing and we're getting, new investment types. Like, how do we overcome this legacy of how things have always been? So I've been in my role for about 2 years, and one of the programs that I help facilitate is the Accelerator program. and it's led by a group of, really experienced mentors. They're all also angel investors. It's a pretty low barrier to entry in terms of capital. They all put in between 10 and 25K of their own funds. And then at the end of the program, collectively, they invest through a trust in the companies that they all decide who they want to back. And that's been running for almost 10 years now. And it was a bit of a boys' club. There's a couple women on there, but it's, about 90% men on this. And we've really been sort of focusing on how do we get, more diverse mentors coming in and also getting excited about investing in these early stage startups. And the feedback that we keep getting is just that the rigidity in this investment structure and having to, sit at the table with all these men who are going to talk over me, these are sort of the barriers that are stopping people from being interested in coming in. So making that investment structure optional has sort of widened the doors, and we've got more women as mentors, but still missing out on the investment structures. So that's sort of the challenge, and we're playing around with different flexible models and how do we encourage different types of companies. Curious to hear people's thoughts. The other side of it is also just the companies that come through the accelerator program. And I notice again and again that certain founders will get questioned more, and there'll be, just sort of a sense of, well, they're not quite competitive enough, but other companies are getting through without that same scrutiny. And I'm feeling a little bit powerless. So any thoughts, greatly appreciated.
Thoughts?
Yeah, thoughts. So I think the key question, apart from bias, is risk, okay? Risk when it comes to the projects to be invested in, and clearly risk-averse angel investors with their revenue-based financing funds. But anyways, I really think that, let's say, not everyone should be an entrepreneur or not everyone should be an investor, but I think when they are entering this arena, they should really think about how to reduce the risk for themselves in the biggest way possible. So, for instance, what we have in Europe, and some countries are very good at this, and I'm not sure around the world in the geographies where you are, but for instance, co-investment funds, where countries come in with 50% on top financing for certain accredited investors or other models, then tax breaks. So why not think about, again, on the policy level, designing something that's especially interesting maybe for women? Because I think, when you have a no-brainer investment, everyone will jump in, no matter, But those people who don't have money, they will not jump in, obviously. So there is various issues here to tackle. But also another program in Europe, it's called Women Tech EU. It's specifically focusing on female founders that are in deep tech. Right, so these are very cutting edge science, quantum, biotech, and things like that. And it was very important to design that program in a way that you actually have the ultimate beneficiary, the woman, because we would get applications that would be, put the woman on the board or a co-founder or whatever, but you need to look at, for instance, the shareholding. So we have put if it's below 20% or 25% shareholding in a project, then this is not a woman-led business. So I think, again, some regulation around a smart design of a program. Another thing, the risk. And the third thing is behavior change. So how do you make it easy for a woman that is maybe a billionaire or a millionaire, but just doesn't think about this because there's a boys' club or she doesn't feel comfortable to talk in meetings. So you need to create this safe space for whoever you want to attract and make it easy for them to be a part of that group.
One of the things that's really taken on popularity in the U.S. has become equity crowdfunding. Crowdfunding was sort of a no-no until equity crowdfunding started getting more popularity. And what's cool about it is that you can get non-accredited investors participating in equity crowdfunding. So for me, it's a pathway to get both accredited and non-accredited individuals who have never done angel investing into the space. And we're piloting a program where, let's say you have your accelerator program or whatever it is, right? Then on the other side, you have people who have not invested and they're generally underrepresented, they're not experienced, they're afraid, they're nascent. In this particular case, we're targeting women in an executive field. They don't qualify as accredited yet. They make $180,000, but sorry, you're not qualified to invest. I mean, I think that's BS, but anyways. So we bring them into a cohort and we say, we're going to allocate X amount of dollars. The program costs $2,500, but we're going to rebate you $1,500, and you're going to invest those $1,500 into a equity crowdfunding component of any one of these companies. And we walk them through how to design your investment thesis, how to work through the due diligence, how to work with the founder, how to evaluate milestones. And then at the end, we evaluate which companies are actually going to get invested. So one person says, I put 500 across 3 companies. I put 100 across 10 companies. Right? So then you start designing your own cohort, understanding, okay, this group is trying to figure out they take bigger risk. This group is less risk averse. So let's start creating sub-cohorts around that. And then let's start curating deal flow into that space. And I don't have to worry about them being accredited because it still happens through the non-accredited platform. So if your region or country doesn't have equity crowdfunding, could you do it through a different mechanism? There's another concept called donor advised funds, right? You can you can provide a donation into a donor advised fund that then is an impact fund that can make an equity investment on that donor's behalf into that company. The returns go back to the nonprofit that then fuels an evergreen fund, right? So the other element that I'm very particular about, I also sit on the board of Hispanics in Philanthropy. We teach that philanthropic giving is a form of investing. So we try to integrate the concept of I am an investor. I'll sit in a room with underrepresented folks and say, I'm an investor. Everybody here say, I am an investor. And people have a really difficult time saying it, right? So getting over that mental trauma of thinking of yourself as an investor is going to be a key component to the education element of what you're integrating in your programs.
Yeah, I think it's interesting. This last part also leads to this behavior change, because I also, when you talk to people, they sometimes don't consider themselves as the real angel investor if they're using, for instance, like a platform to invest, or I'm not talking about crowdfunding, but something to facilitate the whole documentation and everything. So yeah, that's very interesting.
Yeah. I even thought about getting T-shirts and this just says I'm an investor, and I say go wear it to your next conference and see how much attention you get, when you're just walking down the street with that shirt on. Let me hear from the investors. There's a couple of VCs and some angels. Curious to understand what you're doing within either your fund or your angel group. What does diversity mean to you? It means something different to everybody. So what does it mean to you, and how are you addressing it, tackling it? What do you want to accomplish? Yeah, I'm looking at.
I don't think we have any formal program. We have a female GP and CEO, so I guess there's always a conscious focus on diversity. But yeah, I think we're always trying to tackle our unconscious biases, particularly at the pitch stage. We recognise we've got short periods of time. I was curious around that statement around protection versus promotion. I think that's probably real, even though we don't think about it, so just challenging ourselves. And in terms of diversity, we are heavily aligned to the university sector. It's not a mandate, but naturally because some of our LPs are universities, it goes that way. So I think by virtue of that, we just experience lots of diversity. When you're getting into the bowels of universities, researchers look and sound very different to polished investors. So I think we sort of navigate that naturally. But I think we are always challenging ourselves around, because it is beyond the deployment of capital, it's about time. And there's only so much time in the day for an investor. And so you do tend to just get very rational and efficient around some of your decisions. And I think that's when the biases can just creep in very quickly.
Yeah. Rob, Yeah, I'm gonna call out Rob. Sorry, I've been calling him out all conference long.
Thank you. So Rob Barton, I am leading a First Nations investment network. We're establishing in Australia. We launched in June. We're called the Black Angels. So we're sort of three phases to what we're doing. One is building out a community of like-minded First Nations individuals who've either through the success in business or have an interest or an aspiration or a passion for supporting founders. And so we've got 12 in our cohort at this stage. So that's the community piece, but that we hope will grow to hundreds. And since we've launched, we're getting 3 to 5 inquiries a week from the investor side. But we're also kind of conscious that we want to grow the community from a firm foundation. The second piece is around capability development and education. So we really want to make sure that we're educating our investors, that we have a firm framework, and that we, learn from others who've done it. Not so much that we don't want to learn by mistakes, but mistakes that cost time, cost money, and it's also, it's a team sport. We want to learn from others and kind of share the love. We also sort of see that at the moment there's not a real place for us in the ecosystem, so we really want to kind of eke out our part in the space. And part one, there's sort of two phases of that. One is about identity and connecting, so everyone says, oh yeah, that's the Black investors. I want to be part of that group, or hey, I'm a First Nations founder. I want to be able to connect and find finance for my venture. And we're kind of overcoming 3 barriers. One is access to capital. There's kind of this monopoly game that's played out in Indigenous history in this country, and we've really only started to participate in the economy since 1967. But we're sort of starting to play around the board, and we're realising that a lot of the assets are out of our reach. So it's how do we start to build out our own assets and learn from the best. So community, education, and part of the education piece is a delegation to the US, Black, Hispanic, First Nations investors, working with Eli and a whole range of stakeholders there. It's pretty amazing how generous people are with the time, and it's a massive market. Folks have got a lot more transactions under their belt, and this is a hard skills game, and it's a soft skills game, and a lot of the soft skills is where the nuances are, and that's what we're really interested in learning. How do we grow in an efficient way and build from there? The third piece that we'll be doing, there'll be a reverse delegation, so we'll be bringing investors back to Australia, Black, Hispanic, First Nations, and then sharing what we've got going on in the ecosystem here. And then we'll build out the syndicate, and that'll be really what's the best structure that'll enable us to play in the game and then grow from there. We really take sort of heart from some of the First Nations groups we're engaging with, and particularly some of the Black investment groups as well, Hispanic, etc., in terms of just the rate of growth and the rate of success. So you take Harlem Capital, which really started with 3 investors, 25,000, 5,000 across 5 investments, and one of those became a home run, intergenerational wealth generating, and 6 years later they're doing 250 million under investment, which is incredible. But it's based on track record, and I guess we just want to learn by doing, and part of that is about doing that with others. And I guess the bigger part of this is around the support that we'll be able to connect with. We've had, since we've launched, we've had a lot of inquiries from other groups, particularly around how can we support you, and that's been really heartening as well. So thank you.
Excellent.
I've heard a bit of times about investor training and education, and I guess what you're doing. What are people doing in terms of new investor education? Is there the biases do exist, and some technologies, deep tech, med tech, take a longer time or period? Is there any scope? Is there any good programs or any good investor training that you've seen or done or heard? And can I build on that? Yeah.
Can I build on Zoe? Sorry, we're just a two-person show. I would be very keen to have Zoe's question answered as well, with anyone considering also a lot of the challenges that you have when you're working with underrepresented investors is actually getting around. I think Eli touched on it before with the idea of a track record for investment, and also as well in Australia it's called qualifying to be a sophisticated investor. I think you've both referenced the other qualifications that are needed. So not only I guess the training program, but also giving the mechanisms and the pathways. Here in Australia, you can qualify to invest if you can show enough education in the space. You can actually take a test and get around it. So for example, I don't technically qualify, but I'm an LP in a couple of funds myself through that mechanism. So be very keen to understand that, and then which ones at the end of that actually give people access to signing off to actively invest.
Yeah.
Sorry.
Yeah, no, thanks.
So do you want to, because we're going to start wrapping up, but you want to touch on that a little bit, and then we can do some closing remarks?
Yeah, so what I think, there is a lot of different investment trainings that has come up recently. I think it's a great market that's, expanding, but the question is like, what's the quality of those investment trainings? As I've said earlier, there's actually also a research piece about how, to certain underrepresented founders and investors, these kind of things just waste time. So I think, actually, I started investing as a part of a female-led business angel group with training. So I learned from the mistakes that I've made by joining that investment program. And I think any kind of investment program that's focusing on any kind of group or any kind of, it doesn't matter if it's underrepresented or not, or like where it sits in the industry, I think you need to look at the real qualifications of the people who do it. I think that's really, and then you will maybe get something out of it or not, but you need to make sure that you're really working with really experienced people and not someone who's gonna, go there and say, oh, term sheet, is it binding or it's not binding, or, things like that. But, this was like maybe 10, 15 years ago when I started, in this space. I think nowadays you have a lot of also in Europe, for instance, the European Institute of Innovation and Technology does a lot of trainings for women investors in particular. European Innovation Council, there's a lot of service providers around it as well that meet in these programs. So it's coming up. I don't have, like, let's say a best practice on a global level, but for instance, this EIT program is one. Yeah.
I would just say on the training, be very conscientious about who you're bringing together to participate in the training. What's the ultimate end game for them? And then 3, you got to move them to action. Rob has heard me say this. You have to move them. If you're training them to be an investor, you have to get them to invest. You got to get them over that hill. And so if you don't get them over, then we didn't provide more access to capital, right? So you really have to move them. You have to move the needle. You will make mistakes. They will get it wrong. They will lose their money, right? And so you have to be very upfront about it, be very transparent about that. I'm going to finish with my closing remarks in here and say, I don't want to leave you as a Debbie Downer, but things are not looking good, okay? Things are not looking good in the U.S., and this is my battle, right? This is why I'm going to rally. So venture funding has dried up, and venture has gone all the way later stage. That's the massive gap in early stage capital. We're just in year 1 of that downturn. It's going to take another 3 to 4 years for that to come back. If you're an emerging manager trying to raise a fund, good luck. You will be up a hill with 2 rocks against you. So that's not good. The corporate commitments have shrunk up. The public markets are down. IPOs are gone. There's all sorts of stuff, right? And everything that was cool to invest in black in the US is no longer cool. In fact, it's going in the opposite direction. There's a big fund in the US called Fearless Fund, led by black women who invest in black women. They are now getting sued by the organization that overturned affirmative action, and they're claiming you are discriminated against any other race other than black. So that is transcending across corporates who have DEI programs, other law firms that represent those emerging funds. So there's this it's a tension, right? And you have to be very conscientious about what's actually happening at the policy level, at the corporate level, at the funding level. So I'll leave you with, the battle is not over. It doesn't look good right now, but I'm not going to stop fighting.
I remain optimistic. I think we have accumulation of overall knowledge, representation, education overall, success stories, and what you are doing. I think this is a fantastic example, and it's really like a multi-layered issue. Maybe it's not going to happen in 5 years. Maybe it's going to happen in 10 definitely not, but maybe 100 years we're going to get, to where we want to be with this equality of chance that I'm talking about. But I remain optimistic because that's what's fair. And I think people have this inherent understanding of how it needs to be. And I just invite you all, no matter how little your contribution to this can be, sometimes it's really, you were saying about biases as well, like, if you're hungry, you're nervous, you're gonna want to wrap up stuff and you maybe make a mistake in decision making. So anywhere where you can be conscious and maybe see someone falling out of this, you can just try to contribute and say, hey, maybe do it a bit later or something like that. So yeah, let's hope. You wanted to say something?
This has been really, really, is this working? This has been really, really great. There's one other vector of diversity I just want to kind of touch on, maybe we haven't really focused on, which is around the people who work in venture capital from a STEM to a non-STEM background. We see a lot of people who work in VC come from a very technical background. They either come from, like myself, I've done mathematics and come from that space. But in terms of making decisions, we have a lot of groupthink. We talk a lot about technology, business models, market. But when I talk to my friends who are coming from a creative sector, they have completely different viewpoints on the opportunities. They talk about the human side. How is it going to make people feel? I think we're really kind of missing that type of diversity within the sector as well. So I'm very keen to kind of see how do you get more non-STEM people into venture capital. So I don't know if anyone's working on anything like that or program like that, but I'd be very keen to, I've been giving this a lot of thought, like how do we do this? And if anyone does have any ideas, yeah, I'd love to have a conversation. But yeah, I just want to add that kind of vector into this conversation as well.
Perfect. What is your name?
Abs Bulbulia.
Okay,
Breakthrough Victoria.
Connect with him after this session. So we are at time. Thank you, everyone, for your time and contributions, and thank you for dealing with only 2 panelists today. So I hope you found it fruitful. Connect with us. All right, enjoy the conference.
Thank you.
Thank you, everyone.